module explains the measurement of national income by income method. Income method measures national income from the perspective of factor income, that is as total factor income. The sum of rent, wages, salary, interest and profit generated by the normal residents of a country during an accounting year. Under this method, income received by all the normal residents of a country for their productive services during an accounting year are added up to obtain the national income, and this method is also known as distributive share method or factor payment method. So, how is domestic income calculated? First of all, we are going to see how is domestic income, that is net domestic product at factor cost, calculated by summing up the factor income generated. It is the sum total of factor income earned by, again, normal residents of a country through various economic activities, and as I have mentioned just now, it includes rent, wages, interest and profit received by factors of production like land, labor, capital and entrepreneurship of a nation. So, when we add compensation of employees, operating surplus and mixed income, we get domestic income, NDP at factor cost. To that, when we add net factor income from abroad, we get national income, that is NNP at factor cost or net national product at factor cost. So, in the previous module, I have already explained what is meant by compensation of employees and what are its components. In this module, I will explain what is operating surplus and mixed income. So, if you get the data for compensation of employees, operating surplus and mixed income, you can add that and will get domestic income, and to that NFI is added, then we will get national income. See, factor income or NDP at factor cost, net domestic product at factor cost or domestic income. How is it calculated? By adding COE, compensation of employees, kindly write full form, then operating surplus, mixed income. While you add these three, you will get domestic income or NDP at factor cost. Now, what are the components of operating surplus? Operating surplus has two main components. They are income from property and income from entrepreneurship. Income from property has three components: rent, royalty and interest. And income from entrepreneurship, that is profit. And this profit is of three types: dividend, undistributed profit and profit tax. So, income from property is rent plus royalty plus interest. Income from entrepreneurship is profit. And profit has three components: dividend, that is distributed profit among the shareholders. Now, there is undistributed profit, that is the net retained earnings of the firms. Then profit tax. So, we are going to see one by one. So, operating surplus is a sum of income from property and income from entrepreneurship, that is rent plus interest plus profit. So, what is income from property? It has three components: rent, interest and royalty. The income from ownership of land and building is known as rent. It also includes imputed rent. That is, if a person is living in his own house, then it is assumed in an economy that he or she is paying rent to himself. This concept is known as imputed rent. So, again we will see what is meant by rent and royalty in detail. Rent is that part of national income which arises from the ownership of land and building, and rental income includes rent of let out land to others, as well as imputed rent, that is of the owner occupied building. Imputed rent is rent of self-occupied properties, and imputed rent of owner occupied houses is calculated on the basis of market rental value of the house. If that building is let out for rent, how much rent it will derive? That cost is considered as imputed rent. Next is royalty. What is royalty? They are payments made for the use of mineral deposits such as coal, oil, etc., or for the use of patents, copyrights, trademarks, etc. So, rent plus royalty. Then interest. That is income from property. So, what is royalty? Once more, it refers to income received for granting leasing rights of subsoil assets. For example, owners of mineral deposits like coal, iron ore, natural gas, etc. can earn income by giving rights of mining to the contractors. So, and it is also payment, as I have mentioned just now, for the use of patents, copyrights, trademarks, etc. That is original content made by a particular person. If somebody else uses it, there will be royalty. Royalty is to be paid to the original owner. Next is interest. It is the amount earned for lending funds to the production units. It also includes imputed interest of fund provided by the entrepreneur. But interest income includes interest on loan taken for productive services only. Interest on national debt, that is paid by government, and interest paid by one firm to another firm are not included. So, income from property is rent plus royalty plus interest. Next is income from entrepreneurship. It is a return of entrepreneur after paying all the other factors of production. And it has three components: dividend, that is distributed profit to the shareholders in the ratio of their shareholding, and then there is undistributed profit, which is called savings of private corporate sector or retained earnings for future use. This is undistributed profit. It is not distributed to shareholders. Then corporate profit tax, that part of profit which is given by a firm to the government as a tax. So when we add these three together, we will get income from entrepreneurship, or we can say it is the total profit. So profit is equal to dividend plus corporate profit tax plus undistributed profit. So kindly see the terms, because while doing the calculation in the question paper, sometimes all these will be given directly. Rent will be given directly, interest will be given directly, then royalty, and then profit. Sometimes the terms, first of all, when you get the question paper, kindly check whether these values are given directly. Sometimes you won't see operating surplus directly. You will see it as rent, interest, royalty, profit. Then you have to add everything separately. Sometimes undistributed profit, corporate profit tax and dividend will be given. And profit also will be given. So in that case you have to take only profit. Otherwise it will be double counting. So sometimes profit, that term won't be given. Instead, sometimes only two terms will be given: dividend and corporate profit tax. So whatever components are there of each and every concept, that is to be studied properly. Then only we can do the calculation. So NDP at factor cost or domestic income, according to income method, domestic income or net domestic product at factor cost is equal to compensation of employees plus operating surplus plus mixed income. In that, now we have seen what is meant by operating surplus. What are its components? They are income from property and income from entrepreneurship. Income from property is rent, royalty and interest. Then income from entrepreneurship is that is profit, which has three components: that is distributed profit, undistributed profit and the corporate tax. So that is corporate profit tax paid to the government by the firm. So when we learn all these components in a proper way thoroughly, then only we can do the calculation. So when we add these concepts, that is rent plus interest plus profit, we get operating surplus plus mixed income plus compensation of employees, we get domestic income. So what is mixed income? Next, mixed income, income of self-employed workers like farmers, barbers, tailors, carpenters, then doctors running their own clinic, and unincorporated organizations or small enterprises like small shopkeepers. You will see near the street and all that, you will see small shopkeepers. Then retail shops, they don't keep records properly. It is very difficult to assess their income. It is called mixed income. They do not maintain proper accounts and they do not generally hire factor services from the market. They do their own work without hiring services from outside. They use their own resources like land, labor, capital, etc. So it is very difficult to classify and estimate their income distinctly among rent, wages, interest and profit. So it is called mixed income. So income of self-employed. Then the unincorporated enterprises. So compensation of employees plus operating surplus plus mixed income, we get domestic income, that is NDP at factor cost. And the components of compensation employees, it is given in detail in the previous module. Kindly refer it. The link will be given below. The components of COE are wages and salaries payable in cash and kind and employers' contribution to social security scheme. To that we have to add operating surplus and mixed income. We get domestic income, that is NDP at factor cost plus net factor income from abroad. We get national income or NNP at a factor cost. And the components of net factor income from abroad, it is also given in another module. So thus, while calculating national income, in the question, we have to check first of all whether all these terms are given directly, whether the values of compensation employees, operating surplus and mixed income given directly, or the components are given. Sometimes it won't be given directly, only the components will be given. For example, instead of operating surplus, it will be given as rent, royalty and interest. And sometimes only royalty and interest will be given. So when we learn the components in a thorough way only, we can do all the calculations. In the next module, I will mention what is meant by double counting. What is the problem of double counting? How can we avoid it? Why should we avoid it? And also the precautions to be taken while measuring national income by the three methods: value added method, income method and expenditure method. Thank you. Please subscribe and share. In the next module, you will see what is the problem of double counting. Why should we avoid